Bitcoin. Depending who you listen to, it's either the best thing since sliced bread and it's going to make gold pointless someday, or it's only used by drug dealers and criminals. Listen, there's so much nonsense out there about Bitcoin. As an investor, what I think is much more interesting than any of that rubbish is when someone like Cathie Wood, the famous Tesla investor, who you've probably seen just about everywhere by now, when a seasoned investor like her comes out and shares her thoughts on it. When someone who I really respect is willing to actually put her money where her mouth is. That's what gets my attention. So her fund ARK recently released a paper discussing what Bitcoin is and what it isn't. In this video, I'm going to break it down for you and add in my own critique in there too. I'm not going to hype up Bitcoin, nor am I going to throw baseless claims at it either. This video is just to teach you about what Bitcoin is, what it isn't, what it has going for it, and of course, some of the negatives too. This is going to be really interesting as well because we've recently heard the two public US companies, Square and MicroStrategy, have bought and are holding hundreds of millions of dollars of Bitcoin between them. So whatever us regular people might think about Bitcoin is fascinating to see how people who are simply so much smarter than myself at least are taking it extremely seriously. People who run huge companies worth many billions of dollars. So let's jump into it and I'll break it down for you. I'm going to start by explaining what Bitcoin is, but wait, don't freak out because I've seen the panic that goes through most people's eyes when you say you'll explain what Bitcoin is. So don't worry, I'm going to make it shockingly simple. Trust me. Let's first think about a regular bank account, just a regular bank account. In our example, you're going to send your friend some money from your bank account to their bank account. What happens? Well, now that everything is digital, the bank doesn't exactly need to move physical cash anywhere. Essentially, the bank just has one gigantic Excel spreadsheet. Next to your name, it says $1,000. Next to your friend's name, it says $500. If you send them $250, the bank is just going to minus $250 from your account and add $250 to their accounts. Pretty simple. I think we can all understand that. Well, Bitcoin is actually surprisingly similar. With Bitcoin, there is also a giant spreadsheet. If you want to send your friend, let's say half a Bitcoin, that half a Bitcoin is going to be minused from your account and added to their account, just like before. On a basic level, if you can just understand that sending money is essentially just moving zeros on a spreadsheet, you're actually pretty much halfway there. Now, if you can answer the question of who decides if the zeros should be moved or not, if you can answer that, you're pretty much all of the way there. So let's try to answer that. Well, when we had the bank before, of course the bank is the person who controls the Excel spreadsheet. So when you click send on your phone, the bank decided whether the money would be sent or not. In the case of Bitcoin though, there is no one single company or individual that controls this spreadsheet. And this is what confuses most people. So when you transfer money using Bitcoin, who does decide if the money should be sent or not? Well, there are thousands or even millions of people worldwide who can all keep a copy of that spreadsheet on their computer, instead of it just being held and accessed by that one bank. Anyone can access it. In fact, if you wanted to, you can even go and check it out after this video. And some of those people who choose to access it also help to run the network by approving your transfer. So when you transfer your money, as long as the majority of people who are helping the network give a thumbs up, your Bitcoin is going to be transferred to your friend. And there are economic incentives sprinkled in there to ensure that the majority will approve your transfer. In other words, if the majority didn't approve your transfer, they probably cost themselves quite a lot of money by damaging the network. Well, as the majority of people generally don't like losing money, there hasn't been a single example of this happening in Bitcoin's entire history. So to recap, moving money around is just moving noughts on a spreadsheet. The real question is just who controls that spreadsheet. In the case of banks, only the bank can see or edit the spreadsheet. In the case of Bitcoin, anyone in the world can see it, and certain people known as miners choose to be part of that group that can also edit the spreadsheet. And of course, anyone can mine because no one is in control to say that you can't be part of it. As long as the majority of those people, the miners, they don't like flushing money down the drain, they're going to help the network run properly, and that means they're going to approve your transfer. So you might need to rewind and listen to that last minute again just to let it properly sink in, because believe me, it took me a long time to get my head around it. But once you do, you pretty much understand the core concept of what Bitcoin is, and I think that's pretty cool. So now that we understand roughly what Bitcoin is, what implications are there when we take the spreadsheet out of the bank's hands and put it into the hands of anyone who wants to keep hold of it? Well, this is where Cathie's team come in, because they've put together this paper and I'm going to run you through the highlights. Essentially, Cathie's team give 4 criteria that a financial system must meet. Number 1, value should be exchanged globally and freely. Number 2, wealth should be owned wholly and protected. In other words, people should be in control of what they own. Number 3, rules should be enforced reliably and predictably. And number 4, integrity of the system should be verifiable. In other words, you and me should be able to verify for ourselves that the system that we're using is designed in a fair way. We shouldn't just have to trust someone promising us that it's fair. So let's see how Cathie and her team compare the current system with Bitcoin for those 4 factors. The first assurance is the value should be exchanged globally and freely. However, centralized parties determine the eligibility of participants and control the flow of money. While controlling the flow of money can protect the financial system from malicious activity, who defines malicious activity? So the point here is that banks and sometimes governments, they decide who can send and receive money and who can't. This is great, to be fair, if your government has your best interest in mind. And call me naive, but I think, to be fair, most governments do. The problem is that there are some governments in the world that are corrupt, they don't have the best interests in mind of their citizens, and this is where we have a problem. With Bitcoin, however, users can send any amount of value anytime to anyone, anywhere. And users are simply defined by their Bitcoin address, which is kind of like your bank account number. Users are not defined by their name, their location, or any other personal information. So we're starting with a pretty contentious one here. Essentially what it comes down to is 2 questions. Number 1, do you think your government or your bank should have the power to turn off access to your money? There's no right or wrong answer here either. I completely get both sides of the argument. Your money is yours. Nobody should be able to touch it. But if your money can't be touched, neither can the money of criminals, and that's not good for society. To tell you the truth, and you might actually be surprised by this, but Bitcoin is terrible criminal money. In its earliest days, Bitcoin was used on the dark web to buy drugs, and so it still carries that association today. But more recent studies have found that a mere 0.5% of Bitcoin transactions are for illicit purposes. So Bitcoin has this spreadsheet that everyone in the world can see, and you can see every transaction ever made in its entire history. You can't see people's names, but you can see their Bitcoin address. With a bit of computer learning, it doesn't take governments too much effort to get a decent idea of who owns which addresses. So any criminal who is using Bitcoin, a publicly visible spreadsheet, to break the law, they're a categorical moron. The truth is that cash, physical money, is a far more effective and private way for criminals to circumvent the law. The second question is, do you think there are certain governments worldwide that maybe you don't trust to only take money out of the hands of criminals? Are there certain governments who might use their powers to stop people accessing their money, not because they've broken laws, but because they're going against the government? In these cases, the fact that Bitcoin can be exchanged globally and freely is a positive for people who are unfortunate enough to be in those countries, and passes the first assurance that Cathie's team have outlined. The second assurance is that wealth should be protected and owned wholly. Cathie's team highlights that in the traditional system, participants rely on a local enforcer to grant property rights and protect property. Whereas with Bitcoin, it has an embedded independent property system. Or another way of saying that, with Bitcoin, whoever holds the private key, which is essentially a password, owns the Bitcoin. So in the traditional system, you're relying on your government and local authorities to keep records of you, let's say, owning some land. Whereas with Bitcoin, the responsibility is on you to keep your passwords safe, meaning nobody else can touch your Bitcoin. So I'll tell you the truth here. I'm fortunate enough to live in a country where I don't think my government is going to take my possessions away from me anytime soon. As a result, this point doesn't really resonate with me so much, and it may not resonate with you so much either. But then again, we should try to imagine we're less fortunate. We live in a country where the government may confiscate our wealth, and then imagine if we would still think the same way. In 2016, India scrapped 500 and 1,000 rupee banknotes overnight. In 2019, the Hong Kong and Shanghai Banking Corporation seized the funds of individuals affiliated with the Hong Kong protests. Even when governments aren't directly confiscating money, we see examples like Venezuela, whose inflation rate rose to 10 million% in 2018. So even though I don't personally feel like I need to control my own wealth so I know that it won't be confiscated, there are clear examples worldwide of people who would benefit from this. The third assurance is that the rules should be enforced reliably and predictably, with Cathie's team citing that in the traditional system, centrally controlled institutions can enforce and change rules arbitrarily, and this can lead to some pretty serious problems. For example, if a central bank mismanages its country's money supply, the money can lose purchasing power through inflation or even hyperinflation, as we saw before with Venezuela. In fact, in the last century, 3 monetary policy changes cascaded, cutting the purchasing power of almost half of the world's currencies by 50%. This chart shows us the share of countries whose currency has lost more than half of its value in just a 5-year period. As we can see, the number of countries undergoing hyperinflation over the past 50 years has been higher than any period before. And there are serious fears that the current situation worldwide could lead to even more examples. Cathie's team highlights that Bitcoin has rules which are enforced reliably and predictably by incorporating a unique system of checks and balances to maintain integrity. For example, we can see on this chart Bitcoin's future supply, which is forever capped at 21 million. This is the maximum number of Bitcoin which can ever exist. This is obviously in contrast to traditional currencies which can be printed at will. In fact, remarkably, estimates are that 22% of the circulating US dollars were printed in 2020 alone. So Bitcoin has rules which are going to be enforced reliably, and we can all find out ahead of time what they are because they're written in the code. Depending what you want though, that's not necessarily the best thing either. I mean, if central banks worldwide hadn't been able to print money and get it in the hands of people who needed it this year, 2020 would have been a much greater disaster. Whether too much money was printed or not, and where some of that money went, is another matter, but money was certainly needed. The point here isn't that Bitcoin is competing with regular money though, because, in my opinion, it's not. It's competing with things like gold. Investments which thrive in times when central banks are printing money because they are limited in supply. Proponents of Bitcoin highlight that Bitcoin is mathematically limited at 21 million, while gold is still being mined, albeit at a pretty slow inflation rate, meaning the Bitcoin is more scarce than gold. And of course it's true, Bitcoin is limited by maths, so it is more scarce than gold. However, there's been a slightly worrying trend over the course of 2020. The correlation between Bitcoin and the stock market has been rising, while the correlation between Bitcoin and gold has been falling. What does that mean? To me, it means that Bitcoin today has not been around for long enough to have the same safe haven status that gold does, even though it does exhibit many of the same properties. Instead, it's viewed today as more of a risky asset. It will be interesting though to see if this changes over time. The fourth assurance is that integrity of the system should be verifiable. Centrally controlled institutions lack transparency and auditability. Little transparency suggests that institutions have no incentive to be accountable. In a more consumer-friendly regime, participants would be able to audit and verify the integrity of the system. Bitcoin, however, embeds native verification tools. So as we know, anything that happens with Bitcoin is shared on the spreadsheet that anyone in the world can access. Bitcoin also follows rules according to its code, which is openly available for anyone to see. Both of those mean that Bitcoin is fully transparent, everyone is treated equally, and the rules are consistently followed. So now that we understand what Bitcoin is and how it compares to the traditional monetary system, I have to say I think Bitcoin has some major flaws. The fact that it's so difficult for many people to use is a big problem. The violent up and down volatile price swings, they put many people off. The fact that it's slow and clunky to use is not good either. I could sit here and say that Bitcoin is perfect money. I could say that Bitcoin is trash, but the truth is, neither of those is right. Bitcoin is entirely unique, and that it's the first currency native to the internet instead of a single country. It isn't likely to replace any traditional currencies, not in my opinion at least, but it looks very similar in many ways to something like gold, and it even has a few advantages that gold doesn't have, such as being able to carry it across borders by simply being able to remember a string of digits so it can't be confiscated off you. Of course, it also has some major disadvantages compared to gold as well. But the fact that Bitcoin is so difficult to pin down to a neat, easy description is because we've never seen anything quite like it before. And that's what makes it so interesting. So I'm going to be recording a part 2 for this video shortly, where we're going to explore Bitcoin from an investment perspective. We're going to be looking at the concrete numbers behind Bitcoin and exploring how it fits into a portfolio based on maths and science, not rumors, hunches, or anything like that, just maths and science. If you want to make sure that you don't miss that, hit the subscribe button now. If you haven't already, click up here to check out another video. And of course, simply thank you for watching.